Welcome back to the channel. I hope you're feeling happy and healthy. As you can probably tell from my voice, it's not doing the happiest, but we will pursue the video today. We've got a lot to cover, looking at the total cryptocurrency market caps, looking at these stable coins. The S&P is also dropping into our zones that we looked at yesterday. The rise of the US dollar ever so slightly. Let's look at that as well. Of course, we have Bitcoin and total market caps to get through. So some massive stuff to look at with this crypto capitulation being absolutely inevitable. Thank you for your comments on the channel that you've been following this entire period, understanding why crypto is capitulating and it continues to capitulate, and staying safe in the market. Absolutely subscribing and liking to the channel and following the videos so that you're able to make the most out of your finances and get through this next stage of the bear market into that accumulation and following bull market. Now, the other thing I'll look at here is the December forecast as well. Just a quick update as we're halfway through the month, because we're looking specifically at December potentially going a little lower than November, but nonetheless, we'll get to that in just a moment as my voice continues to give out. The Wall Street cheat sheet. Now, we continue to capitulate all the way down. Cryptocurrencies are the major one here. Never forget that moving into that next bull market. It'll happen again and again and again, and it happens for tech stocks all the time, okay? So it looks like we are capitulating into this zone here, the anger and the depression, and eventually start to work our way out, but not everything is going to make it. And so far, I always split them apart. Bitcoin, put ETH here as well. Altcoins, throw them all to the side, all of them. There's not one that is going to stand out. They've all lied to us. They've all taken money. Some people have made some good profits, but nonetheless, this is the stage we're getting to. Unless they can confirm and give us confirmation that they're going to make it in the next bull market with the charts, I would stay the hell away from them. So the Wall Street cheat sheet, this is pretty much what I think we're in now. We're in the anger and potentially this bottom here, if we wanted to give it another name, between anger and depression. Love to hear from you guys in the comment section where you think we are. We're going to use this on the way up as well into the peaks of the market, because it just follows the human emotion of the market to a T in every single market. And it will continue to happen throughout our entire lifetimes, because human emotions never change in terms of what events happen in the world. So if we experience a whole ton of greed, we're always going to go through these experiences in the peaks of the market, the thrill, the euphoria, and then the complacency. And if we experience a whole lot of FUD and fear in the market, we're always going to go through these experiences. And our job, if we stay in the markets long enough as traders and investors, is to devise plans on how we can overcome our emotions and make money in the market. And specifically what we do at the Investor Accelerator, and go into a lot of details with that with our members. So if you are interested, check out the links in the top of the video descriptions. Now, a good place to look for why this is happening in cryptos and the capitulation here, looking at the weak and the strong, is the SP 500. We had a daily double top that we covered on the channel, looking at it as a short-term, short position that traders are taking. You can see the top here on the 1st, the next top on the 13th, which put the top in for this particular part of the cycle. And straight up from that point, nice quick succession of 1, 2, 3 days down. If you want to include the top as well, 4 days down from that point. So we had a nice fast move to the downside. That's what we want to see when we get a top in. And we specifically pointed out the 3800 zone as a potential safe area for the market to find support, reassess, reaccumulate, and then try to work its way higher. For the downside, this is also safe around the 3,600 points, because it is previous support levels. It's been broken down and then climbed back above. But if we get to that point for the S&P, this could take just a little longer to recover, to get back to those higher prices. Nonetheless, people are going to be freaking out. The news is going to be crazy. Everyone's going to say, you're wrong, 10K still in play. The S&P is going for another major collapse. They're going to keep comparing 2008 collapse to this particular pattern here, and just expecting that the market goes a lot lower. But overall, we still have a major macro support area here between 3,200 points and 3,600 points. And given that the market's at 3,800 points, we're still a decent away from the bottom of that particular range at 3,200 points. This makes us even higher. We're going to be at least 1,000 points, and for now it's 1,600 points away from the depths of the pandemic crash low. And some people have in their minds that we're going to get to that point. If we did, that would be show's over, right? I doubt, very highly doubt, we'll get anywhere close to 2,200 points. I've said it all year long. That's where we think we're going for the macro at this point for the S&P. But for now, we're sitting in some safe zones. The market's obviously correct. So I wouldn't be getting too worried about this at this point in time. The dollar index, we've been covering this. We got the peak on the channel, on Twitter. So make sure you do check out those links in the video description if you want to follow us on Twitter for some updates on these charts for the macro play here. We're basically assessing what's going on right now. We're getting a drop in the S&P. We're getting a little bit of a rise here in the US dollar, obviously putting some pressure over onto Bitcoin. And cryptos are essentially far, far, far weaker than Bitcoin as we've been tracking the highs and the lows. The lows keep breaking down on major cryptos, whereas for Bitcoin, it is attempting to hold some ground. It's holding ground better than those cryptos. Therefore, those cryptos are weaker, and we expect them to continue to drop. It's basically the support and the resistance of the markets, the weak and the strong. Now, for the US dollar, we are attempting, or we have closed above the 50% level. The major thing here is that we've had 11 weeks down. And like we've covered many times before, we would expect a turn from this point. So we've talked about this, anticipating it, waiting for it. 12 weeks down, you can see here from the previous bear market. And then you had a 1 to potentially 3 week corrective move to the upside, basically a rally in the bear market. Had it again, 10 bars down, and you had 1, 2, 3 to the peak, corrected down again, and then we had the accumulation before the next bull market. So if we go from this point, maybe we'll see 1, 2, 3 weeks up from this, should this be the low here. Remember, we're 11 weeks down from that top now. Getting that timing on point here is a really good sign. So let's see if this thing does hold up. That would then obviously put some pressure onto Bitcoin and cryptocurrencies. Should it continue to break down, a great point for this market to break down for further weakness for the US dollar would be below 102. If we continue to hold at this level, still not a bad thing, but we definitely want to see it break down from that point so that we start to get a little bit more move on in the rest of the markets. Speaking of which, Bitcoin is now below the $17,000 level. Average recovery is what we were talking about yesterday. Should it hold above around 16,700, we could look for consolidation and a move above, just like we saw in the past here as well. Looking back at this particular zone, you can see the market consolidated and then pushed higher. Same sort of thing back here, consolidated and pushed higher. But if we start to break down into this zone below the 16.7, then that basically sets us up for a much slower recovery, which if you're dollar cost averaging, it's probably not going to be the worst thing in the world. Anything between 15 and 17K, you're probably going to be very, very happy with in 12 months time. For the macro picture of Bitcoin, we specifically looked at lows coming in for the market. So we had a November low in the previous cycle, and then within December, it managed to scoot a little lower, 9.8%. And then we went into about a 3 to 4 month accumulation period before we went on a 300% rise. That was into 2019. And so maybe we're seeing that again. We saw it in a previous cycle back in also 2011, where we had an October low and then a November low, and it was only a couple of percent difference at that point in time. And so if we do that, and say we go to the 10%, the current low is at 15,400-ish. So $1,500 off that basically takes you out to the exact peak of the June top being $13,900. So it's about a $1,500 off the 15,400 low, takes you out to that exact top. Does it have to happen? Of course not. Maybe it's somewhere in the middle. Maybe we touch a little lower than where we currently are. Maybe we don't. But either way, if you're waiting out for those 10Ks or the 8Ks, it's probably getting a little bit riskier for that downside because of how far we've come. Now, my voice is about to give way, so let's get through a couple of these major altcoins like we got in the thumbnails here and the capitulation happening on them. Looking firstly at Ethereum, we talked about ETH lagging Bitcoin a little. It puts in tops a little, often a little bit later, or remains around those higher levels for that, just that little bit longer, like we saw in November of 2021. And then we saw the peak in May of 2021, whereas Bitcoin had a peak in April. And so if we get these lows coming in for Bitcoin, which are a little bit later here, we got the low in November for Bitcoin. Ethereum still hasn't put in that extra low. It's got a higher low so far, but potentially we do drop that bit further. And there's still the possibility of going below the $900 level. And if we do hit around $700, which was the breakout point before the market took off, that's approximately 50% from the current weekly top. But from the current price, it's about a 40% drop as well. So although there's some big downsides for other altcoins, the upsides, of course, should be much greater. The reward should be a lot greater than what the risk is that we put in play here. As for the bear market downtrend on ETH, it did get rejected, and this may lead to those lower prices. For the log chart, it's well and truly still quite a long way from the bear market downtrend on that log chart. So for MATIC as well, it's been holding up relatively well between 70 cents and $1, but we're just starting to get that slight breakdown now with the lower tops forming here on MATIC on the weekly chart. So we're looking a little more macro here, and I would probably be setting some stops in play underneath that 70-cent level, because that could then shoot us back down to these peaks of 57 cents and potentially testing some of the lows around the 30 to 40 cents. But one step at a time. These lows break here, probably going to head back towards the mid 50s to 60-cent level on MATIC. And for Solana, we were looking at a slow grind area. Should the market be able to hold up here at 12 bucks or $13 or $14, but it looks like it is trying to test this low again at $11. Otherwise, if it was able to bounce quite quickly after the FTX scandal, this would have been the healthier recovery here above the $25 level. But nonetheless, this is probably going to head back down. This is probably going to head into that hodlers tiers section if the $11 is taken out at this point, convincingly taken out with a close below those levels, a couple of weeks obviously below that. It's at so far a 95 to 96% complete loss from the all-time high, so max drawdown. And so if we go back to these lower levels, somewhere between that 8 and 9, you sort of start to get around a 97% loss. And going back to the previous resistance levels here, so if that becomes support, that'll take you down to around 98%, similar to what Ethereum did in the last bear market cycle of 2018. So $5 is still not off the cards. I'm not saying it's happening tomorrow. Maybe it goes on a grind here and we head a little higher. But if it does break the 1050-ish level, you could probably be looking further between $5 and $9. So with not much left in my voice, we're going to look at the total cryptocurrency market caps, excluding Bitcoin and ETH, and obviously discuss some of those major levels where we could find support here. Just give us a little handout here by liking and subscribing to the channel. Get this voice better. Click the buttons here, let the fireworks go off. And of course, watch the rest of the videos that will pop up when this video is finished so that you can stay in touch with the entire move and macro analysis of these markets. All right, so total cryptocurrency market cap, Bitcoin and ETH. This was looking towards a complete capitulation zone, and we were minusing the stable coins off, which now sit at around 140 billion. When we first started looking at this, they're around 160. So bit by bit, people have been pulling money out of stable coins as well, which means to the downside with 300 billion in the total market caps. Remember, minus Bitcoin and ETH, take off that 140. It's going to give us about $160 billion market cap currently without those stable coins. So that would set us up somewhere at these higher levels, at these previous peaks. And so if we were to see further downside for the cryptocurrencies, stuff like Binance, Cardano, Solana, things in the top 10 and 20, that's obviously going to take a lot of the market cap out, which means we could get anywhere down, say, if we did hit around 200 billion, take off the current stable coins of 140 billion now, that would leave us with about a $60 billion market cap. And that is now looking like it has the potential. You can see Binance here at 38 billion. The next coin is XRP at 17, nearly 18, and then Doge at 10. And so all that has to happen is BNB to halve, which is what we looked at specifically in yesterday's video, looking at a macro cycle here, a 22-month, nearly 2-year cycle on Binance, potentially going down against BTC value, which may also affect the BNB USD price. Then you can start to see that this might not be so far-fetched. If these coins all came down to 20 billion, XRP maybe to 10, Doge to 5, then you only need to shove in a few extra coins and you basically hit that 60, 70, $80 billion range for the entire cryptocurrency market cap, should everything else fall as well. And this is what happens time and time again through each of these cycles. So until we get a major drop or a major low form with some confirmation that the market is grinding away to form a base, altcoins are still extremely high risk. We can't finish talking about altcoins without talking about Cardano. This was the biggest one of the bull market that everyone absolutely loved. It was the headlines. It was what drew in the crowds. And now we are well and truly into this final capitulation zone that I put up here quite some time ago. I was laughed at for it, but this is cryptocurrency. It takes time, and pretty much those people are probably laughing, either crying or they've left the market, because you can't stomach the losses here. It's pretty hefty here, down to 26 cents on ADA. Let me know in the comments if you remember talking on the channel about this, hitting these lows, potentially 17 cents to 33. It seemed absolutely nuts at the time, but as you can see from the support and resistance levels, it's pretty much a good area for this market to find some support. I'd be looking closer towards the teens to the 20 cent area, but nonetheless, we'll wait and see whether this gets a bottom pattern forming eventually and then a breakout to the upside. Overall, this is going to take a long time for a lot of these cryptocurrencies. They have barely tried to test the bear market downtrend on the logarithmic, and for the linear, they continue to break down to test previous resistance levels. We're basically sitting in a no man's land right now for ADA. So it's going to be a fair bit more pain here involved over the coming weeks and months. Hopefully, fingers crossed, it does find a base sooner and then go along this accumulation journey. We'll continue to follow up on the channel. So thanks for sticking with me throughout that. Apologies about the voice. I can just imagine how annoying it could be for you at the other end. Thanks for the likes, subscribes, the comments down below, letting us know your journeys throughout the bear market and the bull market. We're going to be here for this accumulation period into that next bull market. So stick around the channel, like and subscribe. Check out the videos popping up on your left-hand side for all of the analysis and the previous receipts, understanding how we got to this point and how it's working out so well within these time cycles. Thanks again, guys. I'll see you at the next one. Till then, peace out.